Hi, everyone. My name is Mike Levine, and I'm the head of research at Tendies, which is a small financial technology startup dedicated to bringing good market data and data analytics to everyday investors. I've spoken with Tom a few times before. I think this is our third time together. My background personally comes from the world of private credit and private placements, institutional investments, where I worked with fixed income products and developing, we call them bespoke CDOs for a variety of clients. And now, as the head of research, I, along with a team of professionals from the world of foreign exchange, financial news, and investments, put together a daily newsletter and a news resource for our users that covers topics relating to U.S. equities and the U.S. economy. And as usual, I'm here with Tom to talk about a variety of subjects: geopolitics, macroeconomics, and some of the research that we've been working on.
So, Mike, welcome to this third episode of our podcast. We've done two virtual ones. Now you're here in flesh. Mike is the head of research for Tendies, which sponsors this episode, and we'll talk about that in a bit. So, Mike, everybody's talking right now about that a controversial video that was done by Peter Zeihan about Tesla. We'll talk about that, and we'll get your input as a commodities expert and somewhat of a generalist like Peter Zeihan. You guys are in the same swimming pool. We want to talk about today the US dollar, the supposed or not demise of the US dollar, and the resurgence of the BRICS countries, currency, whatever the fuck that is. And we're going to talk about macroeconomics, recession, stock market crashes, and obviously we'll talk a little bit about Tendies and what you guys are doing over there. Before we do, I hate doing sponsorships. It's fucking annoying, and it just takes away my attention from the video. But I think sponsorships like this, where it's something that gives people actual good resource, good information, especially in this market right now, is super important. So I want to give a shout out to Tendies. I think they're providing a free service that gives you a shit ton of information, actual good data, which is important because there's a lot of bomb information out there. And in my personal opinion, this is the best options calculators I've seen, and it's free. I haven't seen the tool that good that was free, and that most of the paid ones are not as good. So
I mean, thank you for shouting us out. And what we're doing really is we're trying to make it. We're trying to simplify the workflow for your average sort of retail investor guy, somebody who intermediate level, maybe has like $10,000, $20,000 in their portfolio. They swing trade or day trade, and they need reliable market data to inform their decisions. And what we noticed, looking at what's out there already with tools like Unusual Whales or Cheddarflow, is they charge you an exorbitant amount of money for basically a UX that takes in a very standard market data feed, an order book of options, and then makes it look pretty and gives you some data and insights onto it. The actual cost of that data is very, very low, but they're charging their users $120 a month for access to it and some sliders and filters and things. And we looked at this and we said, okay, look, what's the primary objective of our business? Really, we're interested in the brokerage business and providing transaction settlement for our customers. And how can we lead up into that and help people understand that the reliability of this data is accessible for a lot less than what they're paying, really for free.
For free, yeah.
And as the business scales, it actually becomes even cheaper for us because the entitlements that we have to pay to the exchanges go down and the structure of the market data improves. So really, the more people we get using the free stuff, the better it becomes, which seems kind of counterintuitive, but it's really actually how market data works. And that's really what all these companies do, is they take in market data and they redistribute it.
Repackage it.
They repackage it, they make it look nice, and they help people make a decision.
Well, that's 90% of the business, make it look nice and presentable. I mean, that's the product of side of things, which is
right. Yeah,
really
exactly.
Hard.
And so, we have a good team, some folks who helped build StockTwits back in the day, a lot of engineers from, all over the place with good experience on iOS, Android, web, and we're really focusing on
and you guys raised money already a few times?
Yeah, so we just finished wrapping up another round, which now especially was pretty difficult given the circumstances and the macro of the VC market now. But we managed to raise a pretty good round, an up round. And we continue to raise, as we move forward to ensure that, we have our pipeline and we can keep developing.
Can you tell me what's the after money valuation?
No, I can't share that.
Okay. But in any case,
it's good.
I would say that I would define you as a startup because of the stage you guys at, and I think I'm proud to be basically partnered and get paid to promote a product which is a startup and also provides free good information to my audience. They don't have to spend anything.
Yeah.
And that's like the perfect setup for me. I wish every sponsorship I did was like this.
Yeah.
I mean, it's actually very cool. And
it's a very unique company. And when we initially...
Even working with you guys is so different than other brands.
Yeah.
It's absolutely laid back. Nobody says anything.
We take a very relaxed approach to everything, and except for actually making sure that the product works.
Yep.
And, what we noticed really is like, let's say you're an average options trader, you might use Cheddar Flow for order book stuff. You might execute on E-Trade or Fidelity. You might go on optionsprofitcalculator.com to run a strategy. Yep. And then you might have some homebrew stuff that you cooked up in Excel or in a Jupyter notebook that you use for the rest of your calculations.
You're describing me now.
Yeah. Well, I mean, you're like a lot of other people, right? I mean, it's a huge market. And over the last couple of years, people have also mistakenly boxed retail investors into like the Robinhood crowd. But retail is all encompassing.
There's a lot of sophisticated retail investors.
There's a lot of very sophisticated people who are willing to shell out for good research and good data. And, we said, look, we can provide them with a service that bundles it all together. We can eventually give them order execution. And it's become sort of a one-stop shop for qualitative research, data analytics, portfolio analytics, just general decision making, keeping up with your watch list, monitoring your own portfolio, and planning and executing a full trade from start to finish.
I love how I've seen it over the past year. A lot of long-term investors are using options to actually carry out long-term strategies. And I think it's not a tool specifically just for traders. When I look in the context of Tendies, it actually served a very important purpose for long-term investors.
Yeah.
I mean...
There's been a noticeable shift in trading behavior in the last, we'll say, year and a half, especially as, markets have taken a more volatile turn.
We found out who was swimming naked.
Yeah,
pretty much.
Exactly. Yeah. Right. And I mean, the shift has been very noticeable in people's behavior. People are investing or trading more carefully. They're going out to further expirations. The data from Robinhood that they release and from the exchanges demonstrates a huge behavioral shift in how people are making their trading decisions.
Do you like what Robinhood did to the retail investing landscape? It's a loaded question, right? It's a loaded question.
Yeah, I mean, yes and no, right? Because Robinhood's been around for a while. People forget that they, 2016, 2015-ish, they introduced everything. Then options came on a little bit after that. And I would say they were definitely instrumental in the explosion of options trading, specifically because they advertised, commission-free trading, right? Whether or not, look, I mean, pay for order flow as a business has existed for a long time.
Well, it's banned in certain countries for a reason. I think in Australia it's banned.
Yeah.
In other countries.
There's a reason also those markets aren't as optimized or well functioning, right? It's sort of there's two sides of the coin. On the one hand, PFOF ensures that market makers are able to do their job and that they provide
it makes their
liquidity.
job easier. It doesn't really make sure that they get a shit ton of execution on both ends all the time. So then it's an easy business for them.
It's an easy business regardless, but it's also helped secure some monopolies for companies like Susquehanna or Citadel, the two biggest market makers. On the other hand,
I think Citadel is their biggest client.
Yeah. Yeah.
That was one of the issues.
Yeah. But on the other hand, it's provided a very efficient marketplace for equity options, any kind of exchanges, derivatives as well, because market makers participate in that business too. And it's helped make, in the United States, the premier choice, the premier marketplace for investing your money as a foreigner or, a person saving in the US.
I don't think payment for order flow did that. I mean, that
certainly helped.
Well, that was the case before PFOF ever came around the corner. I think there's a lot of issues with payment for order flow. So Patrick was on my podcast and he was explaining to me why PFOF is worth so much money to the market makers. And basically said, look, it's not really a conspiracy theory aspect of it. It's more of imagine you have a car dealership, right? And people come in, they trade in their old car, and then you have to pick it up, and then you have to wait for a buyer for that old car. And it's a hassle, right? So imagine if every second 2 people would come in, one to sell the car, one to buy the same identical car. Basically, that's kind of your dream job as a car salesman. That's essentially what these guys are doing. They're bundling everything up, and there's a massive amount of orders.
They replaced the pit.
Yeah,
they replaced the pit. That's all they did.
But the complaint is on the other side is there's a lot of misrepresentation, at least on the side of the way it's advertised. I don't think we should even be calling it commission-free trading. I mean, there's nothing free.
Right. Well,
you get screwed on execution.
Right. Like any tech product, the part that makes it free is that you're not the customer, right? Is the business that
the data is
data, right?
You're the
product.
You're the product, but I think the bigger issue here is beyond the fact that data is up for grabs, and I don't feel comfortable with that. That's why I don't use PFOF in any of my brokerages. The other problem is you get trash execution.
Right, you get very bad execution.
So it's not free. You're paying by getting trash execution. Right. So you're paying a lot of money.
If you're making a huge volume of trades, a few cents here and there adds up over the course of a year to
And their clientele is mainly trading. They're not like long-term investing. So they're like, if you're a day trader and you're getting trash execution, that's kind of, like driving full throttle neutral.
Robinhood knows their market. And the reason that they provide, they can engage in the PFOF business is because they know that their clients, the people who are using or relying on them for execution, aren't trading huge volumes. They're not, the average Robinhood balance is like under $10,000. It was when the market was good. I don't know what it is now. It's probably a lot lower.
3 at this point,
$3,000 or $4,000 maybe, right?
Yeah.
The average number of trades is huge. They might do 140 options trades a year, 200 options trades a year, which means that every other trading day or every trading day they're making some kind of decision, but their account balance tells me it's a very low value decision. They might be trading something, 60% out of the money on a random, middle market stock versus purchasing leaps or engaging in some kind of protective strategy like a customer on Interactive Brokers would go for, who cares about execution, right? I don't think the Robinhood customer knows what execution is.
Oh, come on.
Or really cares
You just said that they're sophisticated people. Give them a little bit of credit. I think people know. Do you think there's a chance that Gary Gensler or whoever comes after him, is there any chance that they regulate PFOF harsher?
No chance.
Or even cancel it?
There's too much lobbying.
But he made a case. He made a whole PR case.
Gary's made a case for a lot of things. He's made a case for calling cryptocurrencies commodities, even though he himself said that they weren't. He gave lectures where he promoted some random shit coins or whatever, and now he's testifying in front of Congress saying that, they should be completely regulated and their assets. But his stance changes every few months, for what's convenient. I think it's very foolish to rely on the government now to regulate any kind of financial process.
Oh, that's too harsh of a statement.
I mean, have they really done anything?
Well, look.
Does fining Kim Kardashian $1 million really do anything for anybody?
No, we need regulation in financial markets. It would be exponentially worse without regulation.
Of course. And
they're not good at it, but
we have good regulation that's in place, but on the same hand, they haven't added any meaningful regulation since then. If anything, they've stripped away some of it. They've stripped away some of the banking protections. They've stripped away some of the trading protections, the foreign exchange protections, right? All in an effort to make markets supposedly more efficient.
Yeah.
Right. But can markets really get any more efficient than they are now? I don't think so. They're pretty damn efficient. Unless you're talking about like Djibouti or Nigeria, where people are prospecting like they were after the collapse of the Soviet Union for something that's worth 10% of what.
Well, there's still arbitrage to be made in the markets. Obviously, the good players.
Not in U.S. markets, not in crypto even anymore.
So how does the big institutional crowd gets better performance than the retail investors?
Well, they don't.
They don't.
They don't. I mean, if you look at hedge funds in aggregate, they don't outperform markets.
Well, that's the common.
It's like the top 5% of hedge funds actually outperform.
Yeah. So the numbers is basically the longer you go, the smaller the percentage of overperformers is. If you go above 15 years, it's like 5%.
But people kind of get confused though, because the purpose of a hedge fund isn't outperformance.
It's the fees.
It's the fees for the manager, but it's also a tax shelter for the investor.
It's the carried interest.
Right. It's the carried interest.
Yeah.
And look, if I'm if I have, let's say,
let's explain for a second what it is, because some people may not understand. When we say carried interest, we mean the biggest scam in the history of the Internal Revenue Code.
Yeah, carried interest is fantastic. It's basically, let's say you work at a private equity fund and you're like a VP at a private equity fund, and you sit on a deal team that makes a couple different investments. You, as a individual, benefit very significantly by receiving a bonus that's relative to the percentage that that investment has gained on paper. And this is also part of the Hindenburg's alleged complaints against Carl Icahn, right? Is that the way that these businesses mark private investments is they mark them to their model. They don't mark them to the market because there is no market. It's a secondary market that's very illiquid. You can't really sell a $50 million company in 5 seconds like you can $10 million of stock in a couple different transactions. So they benefit.
They paint everything as capital gains.
Right. They paint everything as capital gains, and they mark their investments the way they want them to be valued. And then, what Hindenburg has alleged Carl Icahn does, which is a great example of manipulating the carried interest rule, is that he issues stock to new investors to effectively return, to guarantee return as it is. And he himself owns like 85% of outstanding shares in Icahn Enterprises, and his son owns a bunch of the other shares. So it's like the investors are left with a very, very small pool, and then they just sort of mark their investments as they see fit and continue to benefit very significantly on this rule.
I think it's a funny rule. Basically, the Internal Revenue Code says, hey, if this is your business and this is what you do every day, then this is not capital gains.
Right.
This is actually...
This is income.
This is income, and you should be taxed based on your bracket, right? Except if you're a very rich and influential guy that works probably in Manhattan, in that case, no, for you it's capital gains tax. That's pretty much what it is. And I think it's
exactly. No, it's a very silly.
Mountains of articles was written about these things. It's never changed.
I'm not surprised it hasn't changed because people lobby for all of this and they make sure that those rules don't change at all. But really coming back to sort of the broader picture of hedge funds, right? The hedge funds are set up in a way that ensures that the people who give their money to that hedge fund don't pay tax consequences because they're all domiciled in Luxembourg or the Cayman Islands. They use loops or loopholes in our Internal Revenue Code to make sure that their money is protected. And they issue share classes. And
but they expect to see a certain return on their money. It's not. I worked with hedge funds. Investors expect to see return.
They expect to see a certain performance relative to a benchmark and relative to the rest of their money.
In most hedge funds, you don't get paid until you gave them 8%.
Right.
There's a hurdle of like 8%.
Right. Yeah, they have the high watermark hurdles, or they just
so you don't get paid until you give them 8, and I think 8 they usually get 8, which is pretty much in line.
They can get you 8, depends on the strategy. I think global.
But they don't have to put in the SP 500. They can actually just and they have good years. Like look at what happened with Kathy Wood. She's not a hedge fund, but look.
Right.
She had one great bet. Massive bet on one company that exploded out of stratosphere. She made a shit ton of money for investors.
But not for the reasons she said.
Well, it doesn't matter. Nobody cares why they got paid.
Her investors don't
Here's
care.
the $1,000.
Right.
But
it didn't happen. I mean, look, if I were at the point where I could be giving money to hedge funds to invest, I would care about the underlying thesis of their investment.
Do you think she's a good investor, Kathy Wood?
No, I don't think so. She doesn't have a track record of good investments, of sound investments. I mean, their analyst team at ARK is like guys who served cocktails on private yachts who became analysts and suddenly decided that Tesla is going to own the insurance industry in the US and make robotaxis, It's not their theses in general aren't realistic. And look, they're high conviction. There's nothing wrong with being high conviction, but your conviction has to be founded in something. There are good cases of high conviction investors that have performed better. There's 2 hedge funds that come to mind. Bill Browder's Hermitage Capital, which doesn't exist anymore because he was hunted down by Putin's oligarchs. A friend of mine is a portfolio manager at Firebird, which is a very small, also foreign markets, focusing on Russian and small cap US stocks that have had good performance that's sort of replicable over the last decade. But if you look at sort of hedge funds as an aggregate, you look at like the hedge fund research indexes, Global macro, I think, I might be pulling this out of nowhere, but I think global macro returned like 5 to 6% last year.
Yeah.
Some returned like in the negatives. You've seen Tiger Global blow-ups where they're losing like 40% in a year, where the market lost 17. It depends on how you frame outperformance. Do you want to be positive every year, or do you just want to have some buffer with the S&P 500 every year? Because if you're fishing for a 2 to 3% buffer in a tax-advantaged system, that's okay. That's actually fine. The S&P returns 7%, you get 9, and better taxes. Or the S&P loses 17, you lose 15, and better taxes, right? Then there's tax harvesting strategies. Like Goldman Sachs runs a tax harvesting strategy that's very, very good, like incredibly good, where they replicate the S&P 500 and they use downturns in the market or in a certain time frame to harvest capital gains losses to offset capital gains taxes. And tax loss harvesting has become a very big business in the last couple of years as well, especially with sort of turmoil and uncertainty in how investors are going to be taxed in the future. There's talk of, not just income tax increases, but changes to the capital gains code that people are getting concerned about, how we classify certain assets, how we mark the value of certain assets. So the private investment landscape is changing quite a lot. It's actually not something I cover very much on research on the Tendies product, because I like to stick to the equity stories. I think they're more valuable for the people who are using our product. But look, I mean, you and I have both worked in private markets, so we kind of know. We know the deal. We know what it looks like.
I can write books.
Yeah,
but I will never.
Right.
I will never do it.
But
I know a guy who did.
Yeah,
he wrote a book. I can't say which, and he changed the names, but I know all the stories.
Okay. Yeah, that doesn't surprise me at all.
Yeah, crazy stuff.
It's a very tight market to be in. And look, if you're lucky enough to be an accredited investor and you can throw 250 grand, $1 million into a solid fund that is actually taking money as well. I mean, a lot of funds are oversubscribed. So they're not taking money. So you're forced to go look for whatever else. Or fall into one of these like democratized private equity products, which I think are also full of shit. Like Masterworks, or I can't remember the name, but there's a couple that do real estate private equity investment. So accredited investor, for 15 grand, you can buy like 0.5%.
You don't like Masterworks with the art?
No.
Liquidity issues? Why?
Because it's mark to model. There's no market. You can't look. The reason asset pricing works is because you have two identical assets. Even in real estate, you can take two.
Just for disclosure, they offered to sponsor my videos a few times, and I said no issues with them at all. I just don't like the idea of illiquid investments.
Well, that's exactly. It's super illiquid, but there's also no comps, because you can take two different Picasso paintings and they appreciate the value differently and they sell for different prices at the auction, literally depending on who decided to go to Sotheby's that day. Because it could be, if an auction on a Wednesday, this is the same deal with rare luxury cars, right? This is a market I follow a lot because I'm interested in classic cars, like Patrick. You could.
I know what he has. He didn't say on the stream. I can tell you later.
Yeah, I'd like to know later.
He has one of the most beautiful cars ever made.
I'm not surprised. He seems like he has good taste.
I'll just give you a hint. It's very impractical.
Okay, that could be a lot of things. But if you look at, let's say the Bring a Trailer, which is a website that's like an eBay for cars specifically, classic cars. And you look at price histories, and just how auctions work, because they're very liquid. They have a ton of different auctions going. If an auction ends on a Wednesday for, let's say, a 1979 Porsche 911, a G50, which is a very coveted model, a coupe, versus an auction that ends on a Saturday afternoon, the auction that ends on a Saturday afternoon for two nearly identical vehicles with similar provenance is going to do 10 to 15% better, right? So, and then you take paintings, which are not identical, are victims of forgery, complicated markets. They rely on expert valuations, which is also a very tricky business. Depends on what kind of art the expert studied and what they like and who their clients are. Because if you are a representative at Sotheby's and you sell Basquiat paintings and you have clients who you've built a book with and you sell them Basquiat paintings as they go on the market, you can't go and say, well, this Basquiat is actually worth 20% less than all the rest, because that kills the value by comps of everything else.
Yep.
So it's a very inflated market. The prices have to go up. So in the one sense, because prices have to go up, it's kind of an okay business. But it's not okay for just shoving it into a random exchange traded product and selling people very illiquid shares that they can't move on something that they've been promised with a big, big asterisk, 12% returns on every year, when one painting is not like the other.
I think it's a dangerous claim.
I think it's a very dangerous claim.
I didn't like it. When I had the initial approach, that's the one thing I pushed back on before I said no.
Yeah,
I can't even
claims like that, even in real estate, especially with a lot of these real estate crowdfunding products, as they say, look, this is going to appreciate 10 to 12% a year, but that relies on the model that they've constructed for this building, which is that you lease 98% of the units. Yep. You renovate X number of units, you refinance it.
Yeah, the stars have to align for that to happen.
Right. Your cap rate hits certain milestones. The business itself functions in a certain way. Yeah. The market is unchanged. But it's done everywhere. It's done in every single market like that. I mean, you take Azerbaijan, this is totally unrelated, but we can talk about oil, right? We can shift into commodities here. So OPEC released their summer report. They said travel is going to be really big. Oil demand is going to go up. They're projecting oil at like $75, $80 a barrel. But production costs and break-even costs haven't decreased. So they have to cut production to lower their cost, but also to increase the price of oil so they break even a little bit better, right? But then you look at a country like Azerbaijan.
I like the term break even a little bit better.
Yeah, I mean, look, people talk about OPEC and everything else, but in reality, most members of OPEC are running a break-even business. It's not very profitable for them. The profit comes from refining activities and then the business they get from the other OPEC countries as a result of it.
Well, at $80 a barrel, I think they're fine.
You'd think so. But let's dig a little deeper. Azerbaijan, a company that produces 650,000 barrels per day of oil. That's their production target for 2023. Their government sets the break-even price of oil, their model that determines their break-even profits, sets oil at $50 a barrel. The real cost of extraction right now in Azerbaijan is like $72 a barrel. So if they're selling oil at 65 and taking it out at 72, they're losing money.
So why are they doing it?
Because they have no other economy. They have no other business. They can't do anything else. And so OPEC is effectively just trying to scramble to keep their relationships alive.
So just to keep the foreign currency coming? That's the only reason?
Basically. That's all they can do. That's all they can do.
And how many of the OPEC members are like that in the same situation?
Quite a few. I mean, a lot of the smaller members that produce in that like under 1 million barrels a day range, a lot of them are like that, where they mark oil at $50, $60 a barrel for their break-even extraction cost. Extraction costs in reality are like 30% higher than that. Export levels are not where they need to be. So the aggregate is that they're effectively in a money-losing business, but what they have to do is keep scrambling to output more and more and more for more volume so that they break even a little bit better. But then OPEC comes in and says, look, we know that travel is going to be big this year. We've already seen it with airline numbers. Flows through airports are beyond 2019 levels now.
Yep.
People are traveling again. Airline price ticket inflation actually isn't that bad if you look at it in the aggregate across all popular destinations. Hotel numbers have been really, really good. All the major hotel companies just released their earnings last week or the week before. Marriott, Hilton, et cetera. They all reported big increases in RevPAR, which is revenue per available room, of like 20 to 45% across the board. So people are staying longer. They're extending their stays. They're focused on experience.
We haven't hit summer yet.
Right. And we haven't even hit summer yet.
Yep.
That's just first quarter earnings look like that.
Yep.
So first quarter earnings in aggregate, they're seeing a 30% increase in revenues and all their available rooms. What's it going to look like in peak, July, August, September travel times? It's going to be great. Hotels are a good business to be in right now.
But wouldn't it make sense for them to output more oil if the demand is going to go up like crazy? I mean, you can sell a smaller margin, a bigger quantity of product.
Yes, you can. But I think OPEC is also playing a political manipulation game a little bit. They know that the United States is reliant.
Just to fuck with Biden?
Yeah, just to fuck with Biden. There were 2 cases of that failed SPR refill negotiation where the Biden administration basically fumbled the bag pretty bad. Oil was very, very cheap, and they wanted it cheaper to refill the SPR, and OPEC said no. And what the administration has done in the United States has been pretty damaging too, where they've basically blocked permitting.
Why would they do that though?
They have a climate agenda. They have an agenda, a political and economic agenda, where they want to push certain things. I'm not going to dive into sort of the WEF conspiracy stuff. Because I think that's not really for now. But
you'd be surprised how many people click on that. If I make that video,
a ton.
it's a million views.
I'm sure everybody clicks on it. Yeah, because that's what people want to see. But the oil market and the oil extraction market in the U.S. is actually very interesting because prior to there were murmurings in like 2019 about decreasing permitting, and a lot of companies actually went and got a surplus of permits. There's something like 4,000 unused new permits for extraction in the United States right now among all of the major and minor players. The problem is that because of just macroeconomic changes again, the cost of extraction also varies like well to well. So one well may be a lot easier to get oil out of than the other, and that's simply it. And a lot of projects, might fail down the road, especially for smaller companies that aren't as well capitalized. They're also relying on, less volatility in the oil markets, where we don't have 8% drops or 8% increases week over week that are kind of pretty correlated with the S&P 500 as well. If you just as a corollary, if you look at, week to week or week over week changes in the S&P versus WTI crude, they're pretty inversely correlated. Usually when the S&P goes up, oil goes down.
Yep.
So, oil markets in the U.S. in general are just kind of tricky. We've had issues exporting gas as well.
But what about the SPR though? Is this like a real issue?
Yeah, totally. The SPR
How much they're in the hole for?
It's at, I believe, as of the last data I looked at, it was at like 30-40% capacity. So it's very low. It's the lowest it's ever been. It's the lowest it's been since the SPR was created.
And they don't want to fill it up right now because of the higher prices.
Yeah.
So they're just waiting for the summer when prices are even more expensive.
Yeah, basically. And the bigger problem too is, gasoline and oil are great, but diesel is really the big thing. Because diesel powers all industrial activity.
Yep.
Powers construction equipment, mining equipment, all the rest. All logistics is powered by diesel. And there were a few cases now where diesel supplies were so constrained, there was a shortage on the East Coast last fall, where literally producers and distributors were scrambling to refill diesel tanks, and they couldn't in some areas because there just wasn't any diesel, because our oil transportation infrastructure and our crude, our refined products transportation infrastructure is very bad. We rely on railroads and trucks and not pipelines and ships that can move from coast to coast or up and down the coast.
But that's a structural issue. It has nothing to do with policy, right? It's just the way it is.
Well, but it is though. It does have a. It does.
Yeah, maybe like a 50-year policy. It's not this.
I mean, when you block the construction of pipelines and then favor truck transportation as a result, that's a policy issue.
Why would So why would they do that? That's a good question.
It's an environmental agenda.
How are trucks more environmental than a pipeline?
They're not. But a pipeline looks worse on paper.
Oh, got it.
When you're trying to convince people.
You know what it reminds me? I had a buddy who would laid off from a company. He used to do accounting for them. Laid off, and they rehired him as an external subcontractor. So he would cost them more money as an external subcontractor, but they did it because it's no longer on the salary expenses.
Right.
And it looks better for bottom line performance.
Right. For the bottom line.
They've decreased salaries.
Yeah.
But
right.
they're literally paying the dude more.
Yeah. Exactly. That's exactly what it is. And, when you have, people outside of Europe where they stand in the middle of the highway protesting climate, they don't do that in the US really. And if you ask the average person, like in the United States, who's living on the middle income and is just concerned about whether or not they're going to keep their job in the next year, if you ask them, hey, how do you think the oil or the gasoline in your tank gets to the gas station you go to? They don't know.
They don't care.
They don't care because they know it's just going to happen, or they think it'll just happen.
It doesn't magically appear though.
Right. But they also don't know because they don't see the trucks. They don't.
The
see
oil
the
fairy comes in at night and she wand and then it fills up the tank.
Right. And then there's gas. There's always gas at the gas station.
It's like the banking system.
Right. That's the
interest fairy comes in at night, like sprinkles
here's more dollars in your bank account and everything's okay. Right. But the interest fairy is the Fed open market window. Yeah. And there is no oil fairy, because that's just not how commodity transportation works.
But wouldn't it make sense to adjust policy right now, given the geopolitical disturbances, the instability?
Absolutely. But when has any presidential administration made policies that make sense?
No, I think come on, let's not caricaturize the presidents. I mean, at the end of the day, they have to make like massive geopolitical decisions, right? So if the world is on fire, energy independence is a thing, and you have it, you just have to allow it to happen. Why would you block it now, having known like the Russia situation, the China situation, India is creeping up, all those things are happening around the world? Why would you not?
Well, there's a great deal of naivety in U.S. policymakers, especially the bureaucrats who have sort of sat in their positions, the unelected people who've been there for like 3 administrations, who they live in this like DC bubble where, and I've spoken to people like this, they live in this DC bubble where like America is the best and no matter what, people are going to buy our stuff. And, you know, I was thinking about this on the way over here as it relates to like sanctions and just geopolitical policy in general and de-dollarization, right? There's, I don't remember who, but there was this prominent like Chinese YouTuber who is, pretends to be like a dissident or whatever living somewhere. And he was saying that the de-dollarization news is like CCP propaganda or something, which I just laughed at because it's so plainly ridiculous to me. When you have records of like China and Saudi Arabia conducting oil transactions in renminbi and India conducting transactions with Russia in rubles.
So it's a nice segue for our next topic, but I wanted to ask you one more question about oil before we move to de-dollarization. Because what is the likelihood of the U.S. government pivoting, like allowing more refineries to be built, more capex into the oil?
I think it would take a new administration to do it, to be honest.
So if, let's say, Trump comes in next time, he'll do it.
Yeah, he'll probably do it.
Because he's all about the money.
Like, right. He'll do what he did in 2017, where he lifted the moratorium on federal land permits for extraction, and he'll allow the permits to renew. So
I think he's been on record saying, like, we got a shit ton of oil. Why are we
not pulling it out of the ground? I mean, it's a good position to have. Like, oil's not going anywhere as an energy source. We need it. You're wearing plastic shoes. Yeah. I'm wearing a plastic fitness band and also plastic shoes. Yeah. My buttons are plastic.
Everything on this table
is plastic.
Except this glass.
Yeah. But that uses oil products to get manufactured anyways.
Yep.
So like crude is here to stay. It's everywhere. It's not going anywhere, right? There's no removing it from cars is not going to make any meaningful change to the amount of crude that we use.
You think he's going to campaign on that oil thing?
Probably.
I saw Kevin O'Leary talking about building a refinery. Did you see that? Is this for real? Can he raise the capital?
No, he can't.
So it's a publicity stunt.
So one of the problems is in the United States, they've also blocked refinery construction. So one thing that ConocoPhillips has had to do is instead of building a new refinery, they've basically retrofitted to double the capacity of an existing refinery.
That's the same example of the accounting guy getting fired.
Exactly. Yeah. Right. So we can't build new refineries, but we can make our existing ones a little bit better, which is okay. But it doesn't actually, it's not the same as adding refinement capacity. Right.
So he'd rather go and beg and get humiliated by MBS and the Saudis and the UAE and the OPEC plus countries. He's going to beg, get humiliated, and he won't dig up the stuff from his own backyard.
I think what they would
it's mind-boggling to me.
I think what they would rather do is use that as a demonstration that, the companies that provide oil are not our friends. There's a lot of similarities between Biden and Trump foreign policy, actually, if you really look deeply into it. They're very much pushing the idea of like America first. So the CHIPS Act was a big demonstration of that, where we're providing huge subsidies and tax breaks and investment incentives for chip manufacturers to come to the U.S. to reduce our reliance on foreign semiconductor manufacturing. The sanctions against China are very similar to what Trump was doing. So like the trade war has continued. I think some of that has to do with the politics and the policies of those bureaucrats who've sort of been in the system for a couple different administrations. And some of that I think also just has to do with, their understanding, or the people working in that administration, their understanding of where we stand geopolitically, and that we're sort of at like an inflection point.
But do they understand he got humiliated going to Saudi Arabia?
They don't care. They don't care. Because the objective is, I think, the humiliation, the more accidental humiliation is when Biden, had a potty accident in front of the Pope. You didn't hear about this?
No.
He pooped his pants in the Vatican.
No, you cannot be real, bro.
2 years ago, on a visit to the Vatican, Biden pooped his pants.
How do you know? No. Really? For real? For real?
For real. On live TV in Italy.
And how come nobody said anything about it?
They like quickly escorted him out of the room. He's like, we have a situation.
How do you know he pooped his pants, though?
Dude, it's so obvious he pooped his pants.
You're assuming he pooped his pants.
I think it was confirmed.
Is there evidence of the poopage? Is it like
I really think it was confirmed. This is like a year and a half.
Well, there's plenty other stuff. I mean, he fell asleep many times.
Yeah, tripping over the stairs. They made fun of Trump for carefully walking down a ramp. Carefully walking down that ramp with his slippery leather shoes, and then Biden's like falling down the stairs of Air Force One every day.
Have you seen how he fell from the bicycle?
Yeah, that was fantastic. I mean, my 82-year-old grandfather is more, has better balance and is more constitutionally aware than Biden.
Realistically, what's the percentage of sound-mindedness with Biden, do you think?
I think it's very low.
I think he has good days and bad days?
Yeah, I think like any person of that age, he has good days and bad days. Yeah. I think he has great days where he's like up and about and walking around and like he has energy and whatever. Yeah. And then he has days where he's just like doesn't remember anything. And
I suspect he might have
dementia.
Yeah,
absolutely.
Like early stage dementia.
Yeah, or even progressing.
No, progressing you would have caught it, bro.
But you can see it in how he speaks and sort of how he mumbles.
Yeah.
And I mean, Kamala is just high all the time or drunk or something. I think she's sipping wine under her desk all day.
She's not that interesting.
Nobody cares to pay attention to her, but when you listen to her speak, she sounds drunk.
So how desperate, like we're getting a little bit into politics here. I don't care. How desperate, imagine the desperation that they run him again. That they can
Yeah, I mean, they have nobody else to run. That's the thing. But
there's no way he can win. He can't. Like, how would he survive a debate?
I mean, he didn't really do debates last time anyways.
Well, he has to do like 2 or 3 of them.
Yeah.
Like mandated, right? So he'll debate Trump and Trump is going to fucking destroy him. Yeah. So how is he going to win?
I don't know. I don't know what their plan is, to be honest. But even just from from a policy perspective, we kind of got the same guy, but who is more in tune with like the global climate agenda.
But is Trump going to run, you think, or is going to be DeSantis who's going to take that opposite position? It's hard to tell, right?
It's hard to tell. Yeah, I mean, Trump's politics are very like wishy-washy sometimes. He knows how to energize his base and he's very funny. I think he's a very good comedian.
Yep.
Trump is very, very good at crowd control and telling jokes and understanding his audience.
And setting narratives.
Yeah, and setting very, very good narratives.
Yep.
Very bombastic.
Yeah.
And Biden is like a classical politician where he's been involved for 60 years and,
And he's also impaired. Like, it's not the same. Yeah. It's not the same guy.
He's not the same guy. I mean, you listen to him speak even during.
If you watch footage of the Obama Biden, it's not the same dude.
Not the same guy at all. Yeah. No, he's gone, man. He's totally gone.
Even then, he was kind of.
Yeah. But if you listen to him speak, in the 80s, the 90s, when he was in the Senate,
in his prime.
Yeah. I mean, he was a good politician and he was a strong moderate. Biden of 30 years ago, I would have voted for hand over fist. I mean, he was a strong moderate.
So who's calling the shots then? If he's not the one,
bureaucrats, how it always is. the people in the Eisenhower building across the street.
So basically Victoria Nuland.
Yeah, Victoria Nuland and her husband and all the think tanks and the people writing policy papers and people at the UN, all of that.
Yeah, well, that's just scary.
Yeah, it's very scary. And, they don't really understand. I don't think they want to.
Because nobody voted for her.
No, of course not. She was appointed in the Bush years. And maybe the Clinton years. Sorry, she's a Clinton person. Yeah. And she's just stuck around floating from department to department with powerful friends and allies and a powerful husband who runs a think tank. I don't think they really understand the implications of what they're doing. We have been engaged in a trade war with our key partners and the countries that are responsible for global commodity.
Okay, this is interesting. Tell me.
So look, the U.S. policy basically has been, we want to sell as many of our bonds as possible to keep dollar reserves high in the world.
Precisely.
Countries like China come in, they buy treasury bonds in renminbi, and we repay them in dollars. And so in effect, they're holding on to a dollar security.
That's the cheat code for the U.S. economy.
Right.
Basically, everybody wants the U.S. bonds. U.S. bonds.
Everyone wants bonds because they're the safest.
Yeah. Still the case today, by the way.
Even if we get another downgrade in June, still the case.
Yeah.
And a lot of people forget there was a downgrade. We went from AAA to AA under Obama. S&P downgraded us. I think it was 2011. Was the last almost default where we had a big debt ceiling crisis.
And do you think this current situation with the debt ceiling impacts that at all? That demand?
Absolutely.
That instability?
Yeah. They're losing trust.
Even though everybody knows that the game is basically they're gonna raise the debt ceiling.
It'll be a last minute standoff like each time. The government might shut
everybody
down
knows it's a game.
The government might shut down for a couple days, like usual. It happens every
and then they'll just agree to it like they always do.
Yeah. And then they'll bail out the postal service and everything will be hunky-dory again.
But you think it has an impact?
I think it has an impact, especially now, because look, what the United States has done over the last 10 years, and even before, has basically been, look, these countries have come to us, in their developing or highly developed state and said, hey, we want to buy your bonds and we want to sell our stuff to your people.
Mm-hmm.
And we'll give you a small concession of a tariff and we'll be good. We'll export our stuff.
Yep.
Your people will buy it. You'll give us dollars. Everyone's happy. The economy, the global economy keeps working.
Yeah.
There's a degree of independence that some of these countries have gained as a result of their dollar investments. But then at the same time, U.S. foreign policy has been, we want you to continue exporting your stuff into our country. But at the same time, we don't want you to get better at doing it than we are. So we're going to sanction you to hell. But we also want you to keep buying bonds so we can keep giving you dollars. So what the best analogy I can think of is this.
But wait, countries buy bonds because it's not because they like you. It's not a popularity contest. They buy that bond because it's the safest option.
But if the country that
right, it's not about liking the United.
Sure.
Nobody likes the U.S. that buys the bonds.
But if the country that you're buying bonds from makes it harder for you to sell your stuff there for dollars, then why would you want more dollars? They're hurting your business worldwide.
So you're talking specifically about China.
I'm talking about China and Russia. Yeah, China, who we sanctioned
So Russia is what we get resources, right? The earth minerals and all that stuff. The stuff that. Yeah, everything you dig up from the ground comes from Russia, and everything that's been built in the factory comes from China.
Yeah.
They buy the bonds, and we pay them with dollars, and we get all this.
We
stuff.
also buy their stuff, and we sell it here.
Yeah, so that's the system that always worked since the 90s.
For the last 25 years, basically. And what we've, look, this is the simplest analogy I can think of is this. But every day before work, you go to Starbucks. It doesn't matter who the barista is. The barista in the case is like the president of the administration, right? It doesn't matter who the barista is. You always order a cappuccino. Right. One day you walk in.
And he poops his pants.
One day you walk in and let's say you order a medium and they charge you for a medium, but they give you a small. And they start doing that over and over again. And you say, oh, whatever, maybe it's a mistake. No big deal. Then a week of that goes by and you walk in and then the barista takes the lid and hawks a loogie into your cappuccino and gives it to you. And then they expect you to come back and buy more each time. What we're doing is we're openly disrespecting the development and the political power of nuclear countries, right? Countries with thousands of nukes that aren't regulated by treaties because the treaties are 30 years old that didn't happen when these countries had nukes, right? That aren't regulated by agreements that we have negotiated ourselves into or out of. And we've told them, we don't care about your economy. We care about you buying dollars. And we think that we're so good and great that you can only sell your stuff to us, so you have to buy into our scheme. But the effect of globalization is that thanks to the dollar, now India can strengthen their own currency and have their own manufacturing and trade directly with China, not using dollars that they have to get from the United States, but using the renminbi or the rupee.
But the US will always, well, I don't know always, but I can't see like that far to tell you, well, it's no longer the biggest market.
Sure.
Like it's the biggest market for everything, right?
Right. I can't say that either. And I can't
as long as that's the condition, it's very hard to move away from buying US bonds if that's the case.
And I also can't say that the US will lose global reserve currency status. I don't think they will. But there will be a meaningful change in the quantities of those reserves.
Like a multipolar currency world?
Yeah, like a multipolar currency world. Whether that's BRICS, who, they held a conference in late April where
I think it's going to be the rupee.
It could be the rupee.
I think it's the
it
rupee.
Could very easily be the rupee because they're like the pleasant mediator.
Their setup is so perfect.
Yeah, they're geographically, it's great. And also they're like kind of friendly and neutral with everyone.
Demographics is phenomenal.
Really good demographics. Wealth.
And their democracy.
Wealth has been growing
English
very nicely
speaking
there.
For the most part.
Great education, technology systems,
Well, they have the problems. The poverty, corruption. There's some ethnic stuff going on there that are very shady.
Yeah.
I have friends from India and Pakistan. They've told me about it. It's complicated.
And the situation on the border is always a little wild.
But like they have the youngest population in the world. I think median age like 29.
They don't have the aging issue that all the major economies, the legacy major economies.
And there's certain rule of law is kind of acceptable.
Pretty
Banking
good.
System is organized.
Not huge regulatory risk anymore. Modi's
no currency exchanges. It's a good setup.
India is a very strong economy.
I've named them the next China. I don't know if you saw my video.
Yeah, I did. Yeah.
I said that.
And there's a lot of people who have been echoing that exact sentiment. I mean, a couple of years ago, India was like the hotbed for venture capital investment. Now it's private equity, and now soon will be public markets. I could see a case where U.S. companies, Fortune 500 companies, do what China has done in the U.S. and start listing Indian companies as well. Rupee-denominated stocks on the Indian exchanges.
Look at a company like Tata.
Yeah.
Most people in America don't know what the fuck I'm saying. Like what?
But they're as big as Volkswagen.
They're vague size. They
own tons of companies.
And then they sell everything.
Yeah.
They're just not going to compete with the Model X.
Right.
It's a different product.
But it's a different product and a different product market fit too, which we'll get to in a second. But the vast majority of U.S. foreign policy has been basically like keeping these countries on the cusp of dollar reliance and also like pissing them off, basically. So we've done a pretty good job balancing like how much can we upset these governments, but still make them reliant on the dollar. But now because Asia has sort of Eurasia in general has set itself up to be an economic powerhouse on its own, that paradigm is shifting. And so, people got upset last year when I came on and talked about the war and said that India was going to be great for Russia and they were going to buy all their goods and everyone was going to be happy because they had a fundamental misunderstanding of the India-Russia trade relationship.
To an extent.
India stepped in immediately, started buying Russian oil, Russian commodities.
But they're doing it in a way that actually is very smart. I mean, that's the one thing why I think India is the best player like to bet on in the next 30, 40 years is because even now, look at how they're handling the situation. They're playing ball with Russia. They're playing ball with the US. In the whole scheme of these actors right now in this geopolitical reshuffling game that's going on, they're the only ones who are playing both sides.
Mm-hmm.
Even Turkey, it's not really... Okay, Turkey and India, right?
Yeah.
It's the only country...
trust in Turkey than there is in India.
Yeah, exactly. So I'm saying, like, India has played it to perfection where they're friends with everybody.
Yeah.
Like I've never seen that balancing act done so well. I mean, they're trading with Russia, they're trading with the US, everything is.
Everything's great. Apple is expanding in India like crazy.
Do you
That's
think
always
there's
a
a
good sign.
future in our lifetime where there's a complete phase out of manufacturing from China towards like India, like the way I predicted in my video?
I don't think it's going to be a phase out. No, I mean I can't speak 50 years ahead. I don't know, but I think it's realistic that India and China get close to each other in terms of output. Obviously, there's the geographic issue of space, but China doesn't use a lot of the space they have anyways. I mean, it's all very concentrated on these like mega cities that produce everything. And I think the relationships that Europe and the United States have set up with Indian companies are better than those that they've set up with Chinese companies. India, one of the problems that the United States has tried to do, like Europe has been a battleground for foreign policy for the US and China for the last 10 years, especially with the expansion of Belt and Road into Europe. Italy is a great example of this.
You sent me the article.
Yeah. So under Draghi, Italy signed a bunch of memoranda of understanding with China for the Belt and Road Initiative, where China would make huge technology investments in modernizing Italian ports, helping them with transportation infrastructure, financial infrastructure, etc. And they signed a bunch of memos and they said, yeah, okay, we'll get to this. Then COVID happened. There was loss of trust, sanctions, issues moving stuff around, and sort of the letters and the memos just sort of fell by the wayside a little bit. Now you've had this change of power, this regime change in Italy, to a far more right-wing government under Meloni, who, despite she's had her kind of what's the word here? Her sort of false promises a little bit, like every politician. But all in all, I think she's done an okay job so far in her first almost year. She ran on sort of a more isolationist campaign and said that it's in the best interest of Italy to refocus its economic incentives away from China. And so one of the things that one of the big memos that they signed in 2019 was for the European Space Agency and like Italian scientific manufacturers to partner with China to develop modules for the new International Space Station that China's working on, the new Chinese space station. And in response, the United States sort of came in and diplomatically tried to screw that up a little bit. So the United States sort of recommitted economically to Italy, and they said, okay, look, we see China's doing this. Let's see what we can do to help you with your ports and everything.
They're like the divorced kid.
Yeah.
The kid in the divorce.
Yeah,
they're fighting over.
That's exactly what it is. And so now Meloni kind of came out and said a couple days ago,
you mean Italy,
sorry. Yeah. Meloni in Italy said very openly a couple days ago, we are strongly considering exiting our commitments with China for Belt and Road, which is not surprising at all to me, given the amount of infrastructure work the United States has committed in Europe over the last year and a half. The United States has been building very big liquid natural gas ports, receiving ports in Europe all along the coastline, in addition to increasing and modernizing the internet information technology infrastructure. So over the last 10 years, Google, with the help of the US government, has been replacing and improving the fiber lines that run between the US and Europe, whereas Europe has not done that with Asia. The US has made big manufacturing commitments, reduced sanctions, helped bolster the economies, bolster the banking system.
And Italy needed it.
Yeah, Italy needed a lot after the crisis.
Do you think that this might be the first kind of the canary in the coal mine as far as the failure of the Belt and Road Initiative? Because it's been kind of
it's been rocky.
Shaky.
Yeah, it's been very shaky. There's a great documentary that your viewers will find on YouTube. It's called Empire of Dust. It was filmed in about 10 years ago, like 2010, 2011, something like that, where basically this Chinese guy who works for the government or like a government office or like a subcontractor basically goes to Africa, I think it's in the Congo, to oversee Chinese infrastructure developments and investments in the Congo. And he's there with his interpreter and a cameraman who is filming sort of his experience there. It's where the it's also tiresome GIF meme comes from. You've probably seen it. This like Chinese guy standing in an orange desert and he rolls his eyes. And it's also tiresome. Yeah, that's what that's from.
Okay.
Yeah.
I never knew.
Yeah, it's a very, very good documentary. It's about an hour long, hour and a half.
What did you find there?
So Belgium was in control of the Congo for a long time.
Yeah.
And despite the horrors of colonialism and slavery and everything else, they made a lot of they built roads, they built railroads, they put electricity in, they built water infrastructure. And basically the Congolese government and the people of the Congo just sort of let it go to shit. And over the 50 years since Belgium's involvement in the Congo, and China basically I think sees themselves as a modern Belgium, where they're going to come in and create an economically dependent country that relies on their infrastructure investment and their continued financial and physical support to function. And what they've found is that these countries are impossible to work in. It's not just a language barrier. It's a cultural thing. It's a over-reliance on foreign involvement where organizing labor is difficult. Creating the infrastructure for systems to function is difficult, right? Like there's this, a case in the documentary where they're trying to get gravel. They're laying like some kind of water irrigation system or something for this project. And they're trying to get gravel to fill the hole to put the pipe in for drainage. And the guy goes to this gravel factory sort of in the middle of nowhere on like destroyed roads with his interpreter. And the guy running the gravel factory isn't there. And then he takes like an hour to show up. And then he's like, oh, we don't have enough gravel for you, or we can't make it, or there's a price issue, or there's like a collection issue, or we're not going to show you where we get the rocks for our gravel because you might make it yourself. But there's a trust issue as well, where like they don't trust a foreign power to come in and try and help them. And I think China has been actually good intentioned in the Belt and Road. Obviously, it's a geopolitical play.
Political maneuvering act.
Huge political maneuvering in a similar way to the United States building military bases all over the world. China wants to build refineries and ports and factories all over the world.
But based on that same assumption, right? If Italy was the battleground and the US, for the meantime, they seem to be winning. If you look at the amount of capex that went into Saudi Arabia, US money, US technology, US expertise, there's just too much of it there for China to make a dent.
Yeah. And the Saudis
And the Saudis hate the US, but
but they know we're relying on their oil.
Yeah.
So, and to the Saudis' credit, they've done a very good job investing that money and building very interesting cities and sort of like creating an oasis in the desert. Whether or not that holds, I mean, look, I've seen advertisements for like Abu Dhabi tourism, go down a water slide, spend some money at a designer store that you have at home and stay in a nice hotel and eat interesting food, and you can't drink. So,
well, if you're a foreigner, you cannot drink?
I don't think you can.
Well, luckily for me, I'm on a zero alcohol diet.
Yeah.
I would fit right in there.
It's the same, so one of our research correspondents, Glenn Carey, who was at Bloomberg for over a decade, he was the bureau chief in the Middle East.
Mm-hmm.
He does some PR work for the government in the Emirates and lives between Dubai and Riyadh. And he is a expat basically living there, and he can't purchase alcohol.
Oh, that's crazy.
So I assume it's the same.
Somebody told me there's bars for foreigners, but
there probably are in like certain expat communities where they've maybe like zoned it where it's okay, sort of made exceptions. But I think it's a very gray area.
Do you remember in the World Cup they banned the beer?
Yeah. Didn't they bring it back afterwards?
I don't remember, but the whole idea was kind of
crazy. And it was
crazy.
a huge like multi-million-dollar loss too for them.
So going into this de-dollarization argument, because this is like on the one hand you have Ray Dalio basically predicting the end of the world, the sky is falling, etc.
I mean, he's done that for years. That's his MO.
Yeah. And you have Peter Schiff who's selling gold, which makes sense why I would say that. Again, nothing new under the sun. On the other hand of the spectrum, you have guys like Peter Zeihan who are saying, well, this is a bunch of horse baloney because like the US dollar is too strong, just too much of it, the political system, the due process, the military might, etc., all the irregular arguments. So where do you think this lands? Like, and like realistically, without all the. I mean, you don't have a horse in this game. So what do you think happens?
I mean, look, it's profitable as a media organization to doom and gloom about the fate of the economy.
Never heard about this tactic. Never heard of it.
You know, having Ray Dalio on saying that the world is over every few months gets ratings for CNBC, and having Peter Schiff come on and hawk his gold gets them ratings, and Peter Zeihan saying the polar opposite for people looking for the other perspective also gets him views, and book sales and everything else. The
lectures.
And he's a very intelligent guy.
Yeah. Very engaging.
Very engaging. Yeah. I've never met or spoken to him, but I've listened to a lot of his stuff, and I've read one of his books. The reality, like every other situation, is there's a lot of nuance where somewhere between both of those opposite sides, there is like a middle ground where the dollar becomes a little bit less popular. We get some multipolarity, but trade is still necessary for the world economy to function. So someone is going to trade stuff in dollars. American companies are still going to buy Chinese goods in US dollars. Maybe bonds get less popular. Maybe the era of fixed income investment for sovereign wealth funds is over. You know, that's entirely possible, right? Because their own economies have, the reason a lot of these developing nations with like big sovereign wealth funds came to the US is because they didn't have a developed market for them to invest their money into at low risk. But now that's changing.
But which markets are low risk?
So I think Saudi Arabia is considerably low risk than it has been in the past.
Well,
I mean, their sovereign wealth fund is increasing their expansions domestically and around the Middle East.
But if you are a central bank and you have to make a decision, and your main thought process like risk management first, right? So, how much of an allocation would you put in Saudi Arabia versus the US today? It's a
tricky question.
Yeah.
Depends on trade relationships. Depends on.
You still put like 2/3 of your money in US dollar, no matter who you are.
Probably.
All central banks will still put like 70% in US dollar.
But
the question, who comes in number two? That's the big question.
That's the thing is like these countries don't have central banks. They have sovereign wealth funds that regulate their currency and everything else. They don't rely on the central banking system like Europe or China does. Even China, it's not really a central banking. It's a centralized banking system.
Yeah.
Where it's controlled by the government. It's not an independent entity like the Fed is supposed to be. And in Asia, Japan, Korea, Korea especially, they have a sovereign wealth fund as well, not just a central bank. So you have these two entities kind of working with and sometimes against each other to have their own policies and their own investment theses and make decisions that allocate money that's going to be best for their own return objective. So if the objective of a central bank is to support overnight currency transactions in the banking system, they're going to make investments based on that objective. But if the objective of a sovereign wealth fund is to ensure the stability of the currency and the GDP of the country and the overall wealth of the country relative to economic issues with neighbors, then the sovereign wealth fund is going to make investments based on that thesis. And so if the Saudi Arabian sovereign wealth fund says, we're still okay with the dollar, but in the long term, it's going to be best for our preservation of capital to make investments in Australia, at home, in Iran, and in the UK, then they're going to do that. And they're going to do it without buying bonds. They're going to do it just by giving cash and basically funding private equity transactions the way that every other fund does it.
What would be the purpose of doing these little you call them like spitting in the coffee type of actions, like trading with China in yuan denominated currency? It's just to show them that
it's just hubris.
They're doing it to it's like the Russian saying, the ones who
speak softly and with a big stick.
Yeah,
it's 1950s American diplomacy.
Yeah.
It hasn't changed. And that's the problem. American diplomacy is stuck in like the 50s and 60s. We're still moving away from some of those Cold War habits. America's approach to foreign policy in general hasn't really changed from the 50s and 60s, 70s, like Cold War, post-Vietnam era. It's very evident in how both like structurally the people who are in charge have like half of the people in the Senate met John F. Kennedy.
Yeah.
Like Nancy Pelosi, Dianne Feinstein, they have pictures with Kennedy.
Yeah.
And like they're the same age, right? So, you've got these 80-year-olds who were at their prime in the 60s, 70s, and 80s, their political prime. So they still view the world in that way. Then you have bureaucrats who are forced to comply with that worldview to keep their job because they're all self-interested. And so what you end up with is a collection of think tanks, independent policy institutes.
Echo chambers.
In DC, that DC echo chamber, where policy is in a specific frame, where the United States views itself in a particular way. The people running it are all the same, or they think the same way. And there's no threat from the outside world that can't be solved without the military. But the reality is, like, for all the posturing China does for invading Taiwan, everyone's been talking about a hot war in Taiwan. There's going to be a hot war next year for the last 3 years, right? It's not going to happen. China's not that stupid. It's
self-destruct button for them.
It's the complete self-destruct button. It's not going to happen. Like, get that out of your heads, people, please.
No, that's why they didn't do jack shit when Nancy Pelosi went over there.
Yeah, of course. Of course.
They can.
They're not going to, it'd be the worst decision they've ever made. What China
they have such bigger problems than Taiwan.
They have such bigger problems, and they're going to continue their brinkmanship, right? That historically the United States solved by invading. So the Soviet Union does some brinkmanship in Asia, in like an underdeveloped country. Okay, let's flatten it with napalm and roll in and kill everybody. The Soviet Union fucks around in Afghanistan for 10 years and creates the Mujahideen. Okay, let's fund the other guys and then make it our problem 10 years from now.
Yeah, and can't do that. Create the Taliban.
Right. Then we create ISIS. The ISIS came out of Al-Qaeda, which came out of the Taliban, which came out of the Mujahideen, which came out of Russia. So, and that was 1975. And so the mentality of
Soviet Russia was not good at foreign policy.
No. But the mentality was...
You do know the backstory of Afghanistan? Such a stupid
ridiculous.
It's like just stupid. Leave it alone.
Yeah. And even the post-collapse as well with...
they weren't happy with the guy because he was like too independent. Mm-hmm. That was the whole thing. Like,
yeah, I mean, but the United States has done the same thing, just a little more effectively. You know, the United States put Gaddafi in place, and then he made Libya a very nice country to live in and talked about the gold standard, and then they killed him. And they started a revolution.
Well, Saddam was the same thing.
Yeah, Saddam was these guys are all Western educated. They were officers in the British military. They went to Harvard, you know. Nasser was the same deal. Nasser was educated at Harvard. You know, Nasser, the prime minister of Egypt in the 50s, who wanted to nationalize Egypt's entire economy. There was a coup. We got rid of him. There was a coup in Syria, or attempted coup in Syria. You know, the Soviet Union leaving Ukraine to itself. You know, the Crimean Peninsula as well, right? Like all these things stem from like decisions made in the 80s that the United States is still upset about. And at the same time, like the response back then was, we'll just invade and do a coup and it'll be okay. And we'll figure it out 20 years from now and we'll do it all over again. But you can't do that anymore because it's a technological war.
No, you can't do it anymore because right now it's basically there's no proxy wars anymore. It's just basically Russia.
Yeah.
So back in the
US
day
against Russia,
you could have used some proxy wars to avoid. Now it's head-on collision. That's the difference,
right? Where we have like NATO operatives in Ukraine.
Well, that's dangerous.
Yeah, super dangerous.
So Gorbachev once said, remember that famous sentence where the US and Russia can never go to war. They're going to be the end of the world. Yes.
Yeah.
Smart guy. Putin hates him.
Of course.
He didn't go to his funeral. Did you know that?
Because Brezhnev gave away Ukraine.
Was Khrushchev, no?
The policy was all set up. That's the thing.
Didn't Khrushchev give it away because he was Ukrainian?
I don't remember the particular backstory.
But they gave it. But this is a meaningless thing. Like giving away.
Brezhnev gave them their independence.
Yeah. Well, that's meaningless independence.
completely meaningless independence.
Yeah.
Yeah, especially from a cultural perspective too. But
also, Ukraine is literally two countries.
Yeah,
within one.
it's east
People
and
don't
west.
realize it.
People they don't understand.
East Ukraine, West Ukraine is completely different countries.
East Ukraine are Ukrainians.
Yes.
West Ukraine, like where Zelensky is from, he didn't speak Ukrainian until he became a TV star and ran for president.
I know that.
His TV show was in Russian. He is basically Russian.
Yeah. Well, he was making fun of the
Vlad versus Vlad. You know,
he was making fun of the neo-Nazi stuff going on over there, and with the I forgot the name of this regiment, the Azov battalion, all that stuff. He had like acts about it.
Yeah, and
I was like, he had an act where he was like, he was writing a letter to his friend to tell him how good life in Ukraine now is. Like, well, ever since this happened, my morning routine has gotten so much better, and he was like doing like quasi, Nazi stuff, like as if it's working out. Like,
like
he was making fun.
Germany.
He was making fun of it, and now I think he's in a tough spot.
Well, the guy's made $500 million.
Yeah, but how can you can't take this money with you to the grave? What's the point? I mean, he made.
Just have it, I suppose.
Like what happens? Like what happens next? So we know that Russia is crapped its pants.
The war is going to drag on for a while, but nobody's going to let it.
Nobody can win.
Meaningfully escalate.
That's what I'm saying.
It's gonna result. Look, this is a lot of people have drawn this comparison, and I don't like drawing it, but it's like Arab-Israeli conflicts where they fight. The UN steps in, somebody says something, there's an armistice agreement, a ceasefire for like 10 years, then it happens again, lines get moved around.
You think it's going to be a war zone forever?
Yeah.
Because
that started in 2014.
Well, it was a war zone since 2014. It was effectively, the border was a war zone for like 8
No, it's going to be like that for a long time. I mean, I think what Putin wanted to do was effectively what he did with Georgia.
It's not the same thing.
No, it's not the same thing. But I think the Russian,
like with all due respect to Ossetia, like Ukraine it's a different animal.
But I think the Russian political view, at least in the Kremlin, has been that like Crimea is its own thing. You know, Krym, это наш, right?
Nobody would have done anything if it just kept Krim.
Yeah, but
like he already had it, and nobody said the word. Even the Ukrainians, nobody said the word.
Even Google Maps drew the line.
Like because it made sense, because they basically look, it's your access, it's a seaport, it's the
Ukraine's not doing anything with that seaport anyways. They're too poor.
Yeah, Sevastopol is an icon, right? Yeah. It's an icon. It's a strategic importance. It's primarily Russian, etc., 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 etc. So it made sense. But like the next step, what he did is actually where I don't understand what was the point. Like, why would you take on this you bite off such a big?
I think it's.
I think that's hubris.
It is hubris, but it's also hubris on the part of the United States and NATO to violate pacts and agreements and to continue their 1970s brinkmanship against a developed nuclear power with a strong economy.
They wouldn't have never let Ukraine join NATO.
Of course not. They let Finland into NATO faster than they let Ukraine in.
So Putin knew that Ukraine is not joining NATO. I mean, that's never going to happen. That was never going to happen. So I don't think he invaded because he thought there's an actual risk of that happening.
No, but I think he invaded just to prove a point. Because that's the kind of guy he is.
Well, and now look, he
carpet bombed part of his own country.
Yeah, but look at the consequence. Everybody knows his military logistics is shit. The military is exposed. It's not as good as anybody thought.
Yeah.
Unfortunately for him, because
they're just not well trained.
Not well trained, not well equipped. The logistics is problematic. They can't they don't have the logistics.
But that's been the case since the Stalin era too.
It's been the case even in World War II, but they just basically sends more.
That's how Russia's always functioned.
Yeah,
let's just throw millions of people at it until the problem goes
away. Exactly, but you can't do it with Ukraine because they also have millions of people and they're fucking crazy, batshit crazy.
Yeah,
and they'll go down literally to the last person.
Yeah,
you know Ukrainians. My dad told me this when he invaded. It's like, these motherfuckers are going to make his life a living hell because they honestly don't care.
Yeah, they don't care.
They're tough as nails.
It's a cultural issue.
These motherfuckers can live a week of a potato in the woods.
It's a cultural issue as much as it is a geopolitical one. And
so what is he going to achieve at this point? I mean, what's the winning?
I think the objective was an end of brinkmanship, or at least putting a pause on it. But if anything, it's just I think
made NATO stronger and bigger.
I think he misread. I think he just misread the situation.
If you would have let Trump break apart NATO, which I think Trump was about to break apart NATO, he would have won without firing a single bullet. Trump was on his way to breaking apart NATO.
Maybe. I think Trump, to his credit, saw the writing on the wall and that there would be an escalation in the brinkmanship.
But he was saying like, you motherfuckers are not paying your dues, et cetera, et cetera.
Yeah, but I think that was the Trump cover for understanding the diplomatic situation. The guy's not an idiot. I mean, for all of his misgivings and how he talks and everything, I don't think he's stupid. And I think he had strong people under him, like any president has, that aren't just yes men, but also I think people don't give Trump and his administration enough credit for devising strong foreign policy that benefited the economy.
And you're not a Republican, so you're saying that actually is even stronger than...
And, I'm not a Trump fan. I'm a fan of some of his policy decisions, like normalizing relations with Russia, for example. And
he's the only president since I was a kid that addressed the problem of U.S. legal corporate tax evasion.
Mm-hmm.
The only one who talked about it, the only one who tried to, he didn't succeed.
Yeah, he tried.
He legitimately tried. His tax reform was the first time anybody has tried to cause all these motherfuckers to bring the money from Singapore, Hong Kong, and Ireland and bring it home. He tried. It didn't work because they're too rich and too big. But he did try. Yeah, he did that guilty tax, GILTI. I don't know if you heard about it.
Yeah, I remember that.
Yeah, that was smart.
But it was very smart. From a taxation, economic perspective, his administration was very effective. And they tried very hard to make good policies that help the Americans.
Because it's into money. It's like, why are these American companies who are managed from the US and sell in the US don't pay tax here?
Right.
Like, give me an answer.
And exiting NAFTA, I think, was a great...
By the way, there's one solution they missed, the administration. All you had to do is just change one thing in the Internal Revenue Code.
Mm-hmm.
Just define corporate residence.
Well, they just tried. They just tried to do that now, and it didn't work.
Just define it as management and control, like they have in the UK. A UK company is domiciled in the UK for tax purposes if it's managed and controlled effectively from the UK.
Right.
That's it. We don't care where the fuck you incorporated. We don't care who you pay taxes. None of this shit.
Lobbying. The United States is lobbying.
Yes.
Where other
that's the key.
Don't.
The solution is simple. It's just they don't want to do it because it's going to cost them a lot of money.
It's going to cost them donations and money and everything else. And we like lobbyists too much here. It's too big.
So, do you think? I just want to answer here because this is I'm intrigued about this. Mm-hmm. Is there a chance for the RMB to become a quasi secondary world reserve currency, or do we have to wait for the next continent?
I think China has too many internal economic problems to resolve. Everyone talks about China as or not everyone, but a lot of people talk about China as like a sleeping giant.
Well, that's Ray Dalio, basically.
Right. Yeah, that's Ray Dalio. But
if you listen to his arguments, why they're very weird.
They're weak.
Yeah.
Look, here's a great example.
So the answer is probably no.
Amount of data points released by the Chinese central bank, economic data points, has decreased from 45,000 to 8,000 in the last 5 years. They don't tell anybody anything.
Yeah.
They're random data points too. It's how many cars did we
sell?
Do
you believe their GDP numbers?
No.
They're funny as fuck.
No. When you have how can you have real GDP numbers when you manipulate your own currency?
And when the real estate market, which is a third of that...
The government sets exchange rates. It's not a free market.
No, that's...
How can you tell me any of your economic data is actually
real.
Worth looking at if you set your own exchange rates and you control prices?
But even if you ignore that, which is like a break, it's a deal breaker.
Yeah.
1/3 of that GDP is basically this ghost town market where they just fucking build apartments for nothing.
Yeah, they build apartments out of clay and mud and horsehair, and then they fall apart 5 years from now, but nobody pays attention. And it's all
you just described every Chinese car in the market right now,
and it's all financed by a controlled currency.
Yeah,
with fake economic numbers behind it.
So then, so we're talking about the multipolar reserve currency landscape. So if it's not the yuan, which I agree with you 100%, then we have to wait for India to wake up.
I wouldn't be surprised.
Because the BRICS thing is real? Do you think the BRICS
thing is real?
Okay. Do they have a chance?
I think so. And I think it shouldn't be called BRICS because it's everyone else. It's really everyone except the EU and the US.
Well, okay. But the ringleaders is the Russians, the Indians, the Chinese, right? That's the main three powers that's driving.
Brazil shouldn't be in there. But
Well, neither is South Africa, but it doesn't really matter. So it's these three countries. So if their own internal currencies are horseshit and their economies are horseshit.
Well, the only one who isn't horseshit is India.
Well, that's what I'm saying. India doesn't need these motherfuckers. They could just wait the decade and pull the plug.
The problem is that India needs the trade relationships. Because if India starts, you can say they don't need Russia and China, and they could sell to Europe and the US, but that creates a very complicated geopolitical problem where in that way, they've effectively removed their neutrality. I think what's going to happen like 20 years from now is there will be a multipolar currency shift. I really would not be surprised if there was a secondary currency that was BRICS denominated. So the same way that we have like the dollar index, there will be a BRICS index. And in a world of, this is my case for crypto as well, is it'll be some kind of a digital currency that facilitates trade between BRICS member countries. I mean, the US has already started looking into this.
Yep.
Is a Federal Reserve currency, a digital currency that facilitates faster transactions, faster overseas cross-border transactions.
The Chinese have pulled the plug on that already. Yeah. Pulled the button on that. They have their own, right?
They've been digital working yuan. On the digital yuan and CDBCs for
and they've banned Bitcoin
5 years,
which was a.
But China's objective is also it's multipolar because they're interested in population control as well and like economic control. It's a continuance of economic manipulation. Whereas for the United States or India and a group, it's more like facilitating cross-border transactions. Okay. So the cases are a little bit different because in China it's tied in with social credit score and borrowing and
But if you buy the BRICS, like what are you really buying? It's like it's a weird concept.
The United States was at one point very good at producing stuff, and then it got very good at importing talent so that it could help produce stuff elsewhere. So in a way, the United States was like the middleman for everything and amalgamated a bunch of separate industries into one economy, either directly or indirectly. Whereas if you create a region of countries around India, what's more likely to happen is that, each one is responsible for some geopolitical or economic sector. So somebody takes care of natural resources, somebody specializes in tech. And so what you're effectively buying with a currency like that is a store of value similar to that of the dollar, relative to the technological advancements of this region, of this whole area of the globe that hasn't really seen a focused investment until the last few years.
Yeah, I wonder if they have the chops to make it happen. I'm not sure.
I think so.
There's a lot of moving parts for this. You need to have enough of a supply of the currency. You need to have ability to enforce.
And I don't think it would include OPEC either, to be honest, because OPEC member countries have too much shit going on. The political unrest in Azerbaijan with Armenia, political unrest in Iran, political unrest in Pakistan, the constant human rights shit in Saudi Arabia.
It's a hard question because at the end of the day, you're buying a store of value, so that value is associated with something. And I don't know if central banks want to be associated with Russian economy and the Chinese economy, maybe the Indian economy, but like, don't forget.
They'll make concessions to facilitate trade.
I fear that where we're headed is a world where Russia and Ukraine are slowly becoming, maybe that's the last point we should cover before we sign off today. Russia and Ukraine are slowly becoming North Korea and South Korea. South Korea is the Ukraine, not the Ukraine. And the US is basically the US. And North Korea is Russia. And
plus Crimea.
Yes. Yeah. And basically China is calling the shots over there. So that's what I think is happening. I think China is basically slowly becoming like economically very powerful vis-a-vis Russia. And the same, Ukraine is basically non-existent without the US anymore. So I fear that this is where we're going. And in that reality, they're not equals, China and Russia. And would they really launch this product together if China is basically
If
made
anything,
Russia
it would
into...
be India led.
That's what I'm saying,
It
yeah.
would be India led with some investment from Europe and whatever's around India.
I think do you believe that conspiracy theory that China has played ball with the US to get Russia to invade so they can actually become the only trade partner for Russia?
I wouldn't be surprised. I could see that as a CCP agenda item.
That would be brilliant if they've made it happen, and very sad for Russia.
Yeah. I mean, it
have you seen Russian GDP pre-2014 and now?
Yeah. I mean, it's very sad for Russia in general because removing all of the politics, I mean, if you forget about Putin, it's a very beautiful country with
plenty of resources,
a very well-educated and
no demographic issues.
Populace.
Yeah.
No demographic issues, good technology, like the people there care about their country. They're nice people.
Yeah.
They're well educated. You know, up until the 2000s, like the number one, I won't say the number one, but a lot of people getting H-1B visas were from Russia or green cards. Or like that's, you know, my parents were Soviet immigrants. They came to the United States because of their education. My father was a PhD physicist. My mother was a PhD architect. They were given visas and green cards eventually to work in labs and for big companies in the United States because they were very, very good at their jobs. They're very smart. There's a lot of people like that.
And that's how you solve demographic problem. You bring people in the H1s,
right? And
then you eventually, if they're good enough, they'll stay. They'll become citizens,
fully assimilated citizens, like my parents and people of their generation have who left.
But nobody's going to China. That's what I'm saying. The U.S.
don't want to. Yeah, that's the one caveat about Russian people is they're very racist, and they don't like Chinese people. They don't, especially people from like St. Petersburg or Moscow, or they don't like people from the East. They don't like the Turkmenistani, the Azerbaijan.
But China and Russia always had
Uzbeks.
Like the people forget because of the recent conflict because they got so buddy. But China and Russia were never friends.
They were always competing. Especially when Russia was peak communism.
And Russia was killing it and China was failing.
And China was having their cultural revolution. And
like Russia had the whole, remember in my video I talked about the kolkhoz? Mm-hmm. Kolkhoz, like it worked like to an extent, sort of worked. In China, that motherfucker collapsed.
My parents met in a kolkhoz.
Who didn't? Yeah.
But so did my grandparents.
But in China, that thing fell apart in 2 years and fucking killed like millions of people.
Yeah.
So
huge famines. I mean, you know, the Russian kolkhoz was like, let's plant wheat in the desert. It won't grow next year, but we'll try. And through some, you know, Soviet excellence and might, we'll get it done.
Also in Russia, don't forget there was violent confiscations of property, which they didn't do in China.
Yeah.
Which made it work.
Yeah. But yes, there were. Yeah. And quotas and issues with the same manufacturing issues everyone else has who's communist and all that. But I think that the realistic base case is China somehow emerges from this okay, as they have been. They've been developing trade partnerships with everyone else. There's not going to be a hot war in Taiwan. That would be stupid.
No, that's not happening.
Really, really stupid.
No.
The CHIPS Act is going to work. The U.S. won't fix its tax code. And the euro... well, I won't say and because there's more, but the euro will continue with their crypto exploration to facilitate better cross-border payments. And India will somehow emerge in like 10 to 15 years as a leader in that region.
So last topic before we will let you go in 2 minutes. Inflation, is this thing over?
Yeah.
So it's basically, it's dying out.
I think it's dying out.
So does this mean we don't get a recession?
We'll have a recession because we've set ourselves up for that.
Because of high interest rates.
Because of tightened credit conditions, because of real estate issues, again, as usual.
So what, like in 18 months?
12, 16. Yeah, something like that. I mean, look,
that's the best case scenario they could have had.
Technically, we already had a recession last year when we had 2 quarters of negative.
Yeah, but I mean, a real recession.
Yeah, like a real one that people actually feel.
Well, that's the soft landing they were talking about. It's just not very soft. It's going to be very painful.
Right.
But
it's not going to repeat itself.
But that's the best case scenario, what we're getting now. Because the flip side of that would have been the Paul Volcker recession, which was brutal and disastrous.
Yeah, really bad.
So this one seems to be, look, the job market is holding up nicely. Yeah. So if they go to like 5%, 6% employment, I think they can dodge the bullet. I think the stock market in general is going to be very sidewaysy for
Probably.
the
There's a
next
lot
year.
of, I think it was JP Morgan predicted like 4,200.
Yeah, it's going to be sideways all year long now.
Yeah.
So
It really heavily depends on the quality of earnings for the next quarter, the next 2 quarters.
Palantir killed it.
Yeah, they did. Yeah,
Were you surprised?
Palantir actually did. I am. Yeah, I was surprised. Palantir.
I was surprised too. I'm not gonna lie. I was like, what?
But I'm happy to see like consumer cyclical stuff and discretionary stuff having good earnings the last quarter.
Yeah.
Like I was really, really happy, especially with hotels in general, because that tells me like the health of the American spender is still good, even if it's financed by credit, which is a problem.
17 trillion. Did you see that? 17 trillion.
Yeah,
and that without mortgages, because like mortgages are
that's just household credit debt.
Damn.
Big. Yeah. There will be some settlements. There will be some renegotiations in the coming years, in the coming year, coming months. But
I think that's the strength of the US economy. Consumer spending.
Yeah.
Everything in the US is built towards consumer spending. Every holiday, everything, it's geared towards people spending money.
And the investments companies make are based on that as well.
Yeah. And that greases the wheels constantly. Yeah. I love that. Because everywhere else, like holidays, is like when businesses go to die.
Right. Yeah.
Except the US.
Italy closes down for the entire month of August.
These motherfuckers, they don't understand.
They don't get it.
They don't get it.
Yeah.
Consumerism is where the grease comes from. Anyways, Mike, thank you so much for being with us.
Thanks for having me in person.
Nobody can see me, just you now.
Yeah.
You're the only one in the frame.
Died again. Yeah.
So thank you so much. We'll have you on next time for sure.
Cool. That'd be great. Thanks, Tom.